We've been debating the pros and cons of flash trading on this network. And my next guest has raised Cain against the practice. He's Joe Saluzi, co-head of equity trading at Themis. And Joe, you've been vilified by the bloggers out there, or some of the people, not just bloggers, but some of the other traders who've said, look, you're against flash trading because you don't do flash trading, and it makes your job that much more difficult. So,
well, we're not against. We're for a level playing field. We're for every investor having the same advantages as others. Right now, the structure of the market is that some investors, namely the high-frequency traders, it just happens to be them, have an advantage over others. Now, we don't have a problem with the high-frequency traders per se because they're just following what the rules are as is.
We have using their latest technology, to be able to get a move up on the other competitor. What's wrong with that, right?
Because they're using rules that were enacted by the exchanges to help them. Because they control 70% of the volume, the exchanges court them. They need them. They want them on their machines. So they said, we'll give you flash orders. And by the way, flash orders is just a piece of this subject. It's just 5% of what's going on here. The real issue is co-location of their servers and how they gain an advantage by paying the exchanges to have their servers there. Rebates.
But anyone can pay, though. Anyone can pay and get...
Let's be honest. I'm a regular investor. Can I afford multi-million-dollar payments, basically, payments to an exchange to have my orders? No, I can't. Let's be real.
Okay.
Rebates. The rebate game in trading has been going on for years, ever since 1997 when Island came into the world of electronic trading. You don't need rebates to add liquidity to a system. It's a payment for order flow scam. Similar, if you want to make a comparison, back to the Madoff days when they had a third market maker paying for order flow to get so they can compete with the New York Stock Exchange. I don't want to actually go that direction, but it really is, you don't need rebates, you don't need co-location, you don't need flash orders, and how about a 1-second minimum for orders? Would it be that hard to say, here's my order for 1 second? If you're really an investor, Mr. Flash Trader, put it out there for 1 second, I dare you.
But Joe, and we had David Ravelli on yesterday. He's a good friend of yours as well. He's also against this. But what is wrong with the fact that he was calling it basically legalized front running? But is it really front running when the prices are there to others? It's not as if it's private. I mean, it's out there.
Well, let's look at a real quick example. You place 1,000 shares on the offering of a stock that you want to sell. Before you get you're the only one there. A buyer comes along and says, I'll buy your stock. Before you can sell it to them, a flash order, it's flashed to the community. Someone can step ahead and say, I'll sell that to the guy. So you created the offering. You're the one for displayed liquidity, which Reg NMS really wanted, displayed liquidity. And now you're at a disadvantage because this guy decided to trade in front of it. But that's not really the problem. 99% of these flash orders are canceled. So they're coming in. They're actually on the offering and saying, OK, I'll sell stock. And I go to buy it. And by the time I'm coming in there, they're canceling. And every trader out there knows it. And if you're watching your screens right now, you know what I'm talking about. When you go to try lift stock, you could try to buy 50,000 shares and you get 5,000 shares. Where did it go? It didn't print. It just disappeared. How is that liquidity, Mr. High-Frequency Trader? Where's your liquidity?
So is all that going to come to a head, as we were just talking about, on a down day, on a massive down day in this market?
I have a major fear about a down day. Today there's a New York Times op-ed by Paul Wilmot. Everybody should read it. And he talks about high-frequency trading, and he compares it to portfolio insurance in the 1987, how everybody thought that was the hot thing because they were all making money doing it. Well, right now the hot thing is high-frequency trading, and they're all running. The sheep are all running together with the same thing because it makes money. What happens if we have a down day? What happens when this liquidity that we all love and think is there?
It's going to go like that.
It could, because there's no requirement for it to stand there, and nor do they have a requirement. The SEC doesn't say high-frequency trading, you have to make a market. They do what they want. They're capitalists. That's fine. Nothing wrong with it. But when you think 10 billion shares trade a day, and all of a sudden, if 70% disappears, or even let's say 30% disappears, it's going to be much more hard. It's going to be much more difficult to trade your stock, Mr. Real Investor who wants to exit a block of 1 million shares. Now you can't do it because now you're going to be controlling that stock too much.
Joe, just on a final note, even if you ban flash trading, isn't this money going to find another way to be able to compete, to be able to find a more accurate, a faster way to trade? I mean, this is just flash trading.
Yes, it's just look. We just want a level playing field. We're an agency broker. I'm an institutional agency broker. I protect my clients from these guys and their minefields that they lay out there all day long. I actually enjoy it because I like to compete against the computer, and they think that they're so smart. We actually do a much better job and ask our clients. We do a much better job of trading than some of these guys think they do in their algorithms. But it's just level the playing fields. Make it fair for everybody. Don't give one group of investor an advantage because he's paying you a lot more money than the average investor. That's all we're asking.
Okay, Joe. Thanks so much. Always good to see you as well. And next time we have you on, we're actually going to talk about the markets.
I had some thoughts on that, too.
I know. We'll get to that another time. Thanks so much, Joe. Joe Saluzi of Themis Trading.